Hello and welcome to Cheat Code, how to make retroactive solo 401k contributions. Thank you so much for joining. We appreciate the chance to discuss these topics. If you do have questions, please chat those over as we do have some time here to also go over your questions. But let's jump into, again, how to make retroactive solo 401k contributions. This is a popular topic this time of year. So as always, the presentation is being provided for educational purposes only. Should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. If you're on YouTube, please like, please subscribe, get access to the upcoming webinars. We host webinars twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern, back again at 1 p.m. Pacific, 4 p.m. Eastern. We always like to come with some prepared content, especially on Fridays. We typically have a deep dive session. So subscribing will get you access to the content. You'll be able to come and join us live and ask questions. As we've already got some questions teed up, which is fantastic. So just to lay the foundation, a solo 401k is for someone who's self-employed with no full-time W-2 employees. So think like a solopreneur, a freelancer, independent contractor, a solo practicing attorney or other professional. The key is that you're reporting earned self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by that person or a spouse, if any. No, you do not need to have a formal legal entity. You could operate your business as a sole proprietor as long as you're reporting earned self-employment income. That would be income reported on Schedule C if your business is taxed as a sole proprietorship, or income reported on a W-2, for example, if your business is taxed as an S-Corp. There's no minimum amount of earned self-employment income that one needs to report in order to be eligible to set up a plan. Your spouse or business partner may participate as long as your spouse or business partner are reporting their own earned self-employment income. You can have a solo 401k even if you have a W-2 job, even if you participate in your W-2 employer-sponsored plan. Again, as long as you got that separate earned self-employment income. So as far as the cheat code to be able to make retroactive solo 401k contributions, what smart solopreneurs do is if they didn't set up a plan by the end of the year, so let's say someone didn't sign up with us by December 31st of 2024, or they didn't already have a basic plan set up somewhere else, such as a basic solo 401k plan at a discount brokerage like Fidelity or Schwab, they can still come to us and set up a plan and make 2024 contributions. Now, they may not be able to make all the contributions for 2024, but they can still make some. But if their business is taxed as a sole proprietorship, there is even still time to set up a plan and make all types of contributions for 2024. So what we'll do is we'll go through the different business types because that'll dictate what the different deadlines are. So again, let's start with a sole proprietor, or it could be a single member LLC taxed as a sole proprietor. So if that person set up a plan, in other words, they signed up with us by the end of last year, or they already had a plan somewhere else, like a discount brokerage plan, like at Fidelity, that they now upgrade to our plan here in 2025, that means they had set up the plan by December 31st, 2024. That means that they could still make all types of contributions for 2024, whether employee, employer, or voluntary after tax, by their business tax return deadline, including extension. But even if that person hadn't signed up with us by the end of last year and didn't otherwise have a plan somewhere else, they can still set up a plan here in 2025 and make all types of contributions for 2024, but they would have to set up the plan in time to make at least the employee contributions by April 15th. With respect to the employer and the voluntary after-tax contributions, they could still set up a plan here in 2025 and make employer and after-tax contributions for 2024 all the way up until October 15th of this year, as long as they file a timely extension for their business return, meaning as long as they file a timely extension for their 1040, because the sole proprietor reports their business income on their 1040 on Schedule C. Now, for the other business types, could be a partnership, an S Corp, or a C Corp. If the individual signed up with us before the end of last year or had set up a plan somewhere else before the end of last year, and now they want to restate to our plan, they can still make all types of contributions. The person that has the basic plan somewhere else would have to restate to our plan, and then they could make all types of contributions for 2024 by their business tax return deadline, including extension. So for a C Corp, that's the 11/20 deadline. So it's April 15th or October 15th if you file a timely extension. For a partnership and an S Corp, that's March 17th or September 15th if you file a timely extension for your 1065 in the case of a partnership, or your 1120S in the case of a business taxed as an S Corp. Now, for those self-employed individuals who operate their business as a partnership, an S Corp, or a C Corp, in other words, they don't operate their business as a sole proprietorship, and they didn't sign up with us before the end of last year, and they otherwise didn't have a plan set up somewhere else, like a basic plan at a discount brokerage that had been set up on or before December 31st of last year, then it's too late to make employee contributions for 2024, but they could still make employer contributions and or voluntary after-tax contributions for 2024, as long as they set up the plan in time to make those contributions by their business tax return deadline, including extension. So that's the cheat code that smart solopreneurs can use to make those 2024 contributions, even though they hadn't set up a plan until now here in 2025. So hopefully that helps. We also want to highlight some of the resources. We have our community with over 30,000 members, a vibrant community with folks posting questions in the forums throughout the day. We have our AI, the industry's first AI, solo401k.ai. It's totally free to use. You can access it right there at that website, solo401k.ai. We have the webinars, right? We go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern, back again at 1 p.m. Pacific, 4 p.m. Eastern. So it's always free to join. All are welcome. So if you go to mysolo401k.net/webinar, you can access the schedule. You can submit your email. And then if you can't come to the live session, you'll be sent an email with a link to the recording. So with that stated, now let's go to the questions. Thank you so much for bringing the questions. I'm an LLC S Corp who set up my solo 401k after January this year. For 2024, can I still do voluntary after-tax contributions as part of employer contributions? I ask because I see that voluntary after-tax contributions listed under employee contribution on your site and found that confusing. If still possible, how much is the time limit? It doesn't matter whether it comes from personal or business account. If you could also speak to the limits, for sure. So here, we've identified that the business type is an S Corp, an LLC tax is an S Corp. So let's go to that chart. And we stated, okay, the plan wasn't set up until 2024. So that means that we're here in the bottom half of the chart. That means that the individual can still make employer or voluntary after-tax contributions for 2024, as long as they make those contributions by the business tax return deadline, including extension. Sorry, we're on the C Corp thing. So that means it's March 17th, or if they file a timely extension for their S Corp return, September 15th. Now, voluntary after-tax contributions are a type of employee contribution, but that doesn't mean that it changes these deadlines. These are the deadlines that apply. Now, to the second part of your question is, asking us to speak to the limits. So whenever and if, by the way, again, this is a great reason to subscribe to the channel, because we hosted some deep dive sessions talking about these contribution limits. Let me pull up the one talking about S Corp. So 1 second, please. We just recently hosted a deep dive session focused on S Corps. Let's get it from our main page here. So, but in short, anytime we're talking about how much we can contribute to the solo 401k, it's helpful to recognize that the ability to contribute depends on different factors. One of those factors is the age of the participant. Another factor is the income, which in the case of a business taxed as an S Corp is the W-2 wages from the S Corp. Another factor is the type of contributions that are being made and whether contributions are being made to another plan, like a day job plan. Let's assume the individual is under 50 years of age. Let's assume the individual doesn't make contributions to another plan, like a day job plan. Let's assume that the individual has $100,000 of W-2 wages from their self-employed business taxed as an S Corp. And we know that this individual can only make employer and voluntary after-tax contributions for 2024. So let's assume that they first want to maximize the pre-tax benefit, and then any additional contributions that they make, they want to make as a Roth, or in this case, a mega backdoor Roth contribution. So they can contribute 25% of their W-2 wages, or $25,000 as an employer contribution. That would need to be deposited into the pre-tax account for their solo 401k. Then they can contribute the difference up to $69,000 for 2024 as a voluntary after-tax contribution. So if my math is right, that'd be another $44,000. Now that would first need to be deposited into the after-tax account before it gets moved over to the Roth account. So at the end of the day, they have $25,000 in their pre-tax account that was for that employer contribution, and $44,000 in their Roth account, which was for that mega backdoor Roth contribution. Now the mega backdoor Roth contribution, that second step, remember it's a two-step process. That second step is reportable on a Form 1099-R, which we handle that 1099-R as an optional free service for our customers. There is a form on our website that customers use to let us know about that after-tax to Roth transfer. Here is a procedure page where we talk about how to make those mega backdoor Roth contributions. I'll put it on the screen there so you can grab it. Hopefully that helps. Appreciate it. Good questions. So if you do have more questions, please don't hesitate to chat it over as we do have more time. If you're finding this session helpful, if you could please subscribe on YouTube, we'd really appreciate it as it helps get the word out. Your company has set up a solo 401k for me at Fidelity. I also have a self-directed LLC IRA at a regional bank. Can I transfer funds from my solo 401k to the LLC IRA since my LLC IRA needs some funds? Thanks. Oh, great. Good question. We got some follow-up here. Is there some work on to transfer real estate property owned by the self-directed IRA to me personally? So let's take that 1 second. So thank you so much for the good question. We appreciate it. So here, your question in simple terms is whether you can transfer funds from your solo 401k to your IRA LLC. So I understand that the scenario provides that there's an LLC owned by an IRA. Now, that means that we got to consider the distribution rules. So the rules that apply to being able to transfer money out of the solo 401k. So those rules provide generally speaking, that one cannot transfer money out of a solo 401k until they've met a triggering event. For example, being age 59 and a half or older. Now, there are exceptions to those triggering event requirements. So if the individual is under age 59 and a half, they still may be able to transfer money out. For example, money that was rolled into the solo 401k from a different retirement account, like a former employer plan or a non-Roth IRA, those funds can be rolled out at any time without having to meet a triggering event. So let's assume that the individual is eligible to transfer at least a certain amount of funds out of the solo 401k to the IRA. Then the question becomes, what's the process? So the process is not to transfer directly from the solo 401k to the LLC that's owned by the IRA. Instead, one would need to first transfer to the IRA, and that would need to be, an IRA at one of these specialty banks or trusts or custodians that allows you to invest in an LLC. And then from the IRA, they would work with their IRA LLC provider to move the funds down into the LLC. So it'd be a two-step process. Hopefully that makes sense as far as that question. Now, the follow-up question is, there is some workaround to transfer real estate property owned by the self-directed IRA to me personally. Do I need to sell the property to someone and later that person sells the property to me? Is there some workaround to avoid the prohibited transactions? So with respect to IRAs, the distribution rules are different. Let's assume this is a traditional IRA. So that means that there are no triggering event requirements. In other words, if you have cash in an IRA, you don't have to meet a triggering event before you can take it out. You can just take it out. Now, if you're under age 59 and a half, it's going to be subject to a 10% penalty. Plus, you'll have to add the amount of the cash withdrawn to your income for the year of the distribution. It's also possible, if the IRA provider allows it, to do an in-kind transfer. So let's say you have stock in an IRA and you don't want to sell it, but you still want to take it out of the IRA. So the value of that stock would then become taxable for the year of the distribution. Now the stock would be held in the IRA account holder's name personally. So applying those concepts to a self-directed IRA that owns real estate, it would work the same way, right? As the in-kind distribution. So instead of selling the property, it could be transferred to the person's personal name, but it's still going to be considered a taxable event. It still may be subject to penalties. If the person's under age 59 and a half, the individual would need some type of third-party documentation to demonstrate the value. For example, the IRA provider is going to have to issue a tax form. They're going to have to issue a 1099-R to the IRS to report the value. So they'll need to know the value so they can know what amount to list on the 1099-R to report that taxable distribution. And then that amount will have to be added to the individual's income for the year of the distribution. But because it's in kind, the property would just be transferred to the person's name. Now, if the person owns the property through an IRA LLC, so really the property is held in an LLC that's owned by the IRA, the correct process would really be two transfers. The property would first be distributed up from the LLC to the IRA. So it would be retitled in the name of the IRA custodian for the benefit of that person's IRA. And then it would be distributed from the IRA to the individual as a taxable distribution, and then retitled again from the name of the IRA custodian for the benefit of the IRA to the individual personally. So it's not a prohibited transaction to take an in-kind taxable distribution from one's IRA. Can I invest real estate overseas using a self-directed IRA LLC? Yes, it is possible, but it's not done, certainly, relatively speaking, compared to other transactions that we see. Because, for example, there might be complex local real estate rules in that country. For example, for folks that are investing in certain places in Mexico, the real estate has to be held in a Mexican real estate trust. And then that real estate trust would hold that property for the benefit of the LLC, which is owned by the IRA. The individual would still need to satisfy all the real estate investment rules, right? It would have to be totally for investment purposes, not for personal purposes, can be used by a family member, right? They can't work on the property, etc. It's almost always going to be an all cash deal, right? There are certain lenders that will lend to people's IRAs. It has to be a non-recourse loan, but in our experience, they're not going to lend to help finance the purchase of an investment property overseas, because if they ever had to foreclose on that property, they may not know how to do that for property overseas. So yes, it can theoretically be done, even though it does bring up additional complexities that some folks just find that they'd rather just invest domestically. So yes, I mean, if they accept the US LLC, then that would help to solve that. I mean, other considerations I would say that folks go up against is just, even though the investment might be tax deferred if made in the LLC, if made in the US, because it's being made through a US tax shelter, in other words, a US IRA, that foreign locale, that foreign tax authority may not recognize that same tax deferred status. So that'll, of course, reduce the return on the investment, because now the IRA LLC is going to have to pay taxes in that foreign location. Obviously, you still have property taxes here in the US, even if you're investing your retirement money in real estate here in the US, but at least from an income perspective, it's tax deferred. Great questions. Regarding the solo 401k to IRA transfer, I did transfer $50,000 from IRA to solo 401k a few months ago. Now it is okay to transfer the $50,000 from the solo 401k back to the IRA, right? Yes, because that would be rollover funds. So it still needs to be reported by the solo 401k. For our customers, we handle the 1099-R for those that ask us, in a timely fashion. It's easy to do it. You just go to our website, mysolo401k.net/forms, and submit the applicable form to tell us about that transfer from the solo 401k to the IRA. Okay, so yeah, Dubai accepts US LLCs, no tax on real estate. So it sounds like you've got some good experience there then, or knowledge at least. Excellent questions. So yes, we would encourage you to participate, continue to participate either on these webinars, come to our community. We'll be back again tomorrow at 10 a.m. Pacific, 1 p.m. Eastern, and then back again in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. We always, of course, appreciate the chance to discuss these topics. We love to discuss these topics, so thank you so much for bringing all your good questions. If you go to our YouTube channel, you can see the schedule. If you just go to YouTube and search for My Solo 401k Financial, you'll easily find it. But let me show you the screen here on the screen. 1 second. Okay, here's the YouTube channel. So you can see, yeah, we're talking today about how smart solopreneurs can make retroactive solo 401k contributions. We'll be back tomorrow to talk about how to maximize solo 401k tax savings. So talking about contributions. And then in the afternoon, how to report solo 401k contributions on your tax return. That'll be geared towards businesses' taxes as C Corp. That's the series. We've had a series of those webinars talking about how to report contributions. So if you look at the YouTube live history, you can see the recent sessions. Oh, you set up a call for this Friday. Excellent. For sure. Let me chat over the link to the forms page. If you just type mysolo401k.net/forms, it'll pull it right up too. That's another way to get there easily. All right. Well, you guys have been fantastic as always. Thank you so much for the great engagement. Please continue to participate. Please like, please subscribe, help us get the word out. Until next time, everyone, thank you.